I just bought 1,500 shares of a stock most people have never heard of. I'm not selling any covered calls on it at the moment, and if I did, I wouldn't sell a call below $35. The stock is sitting at $27 right now. That $8 gap tells you everything about how I'm positioned and everything about the opportunity I see in this market. Here's exactly what I'm doing with my money. Across 3 stocks, the market has priced to fail. We're covering 3 setups today. BETR, the AI mortgage company I just loaded up on. Snapchat, which I think is one of the biggest opportunities in this entire market, and UiPath, a pure valuation gap that doesn't require any AI hype to justify. By the end of this video, you'll know exactly where I stand on each one, and you'll know the answer to why I'm holding 1,500 shares and not collecting a single dollar of premium right now. But first, let me show you what the data actually says about the stock I'm most convicted on, because it's not what you've heard. Most people who know better think of it as a broken digital mortgage lender. The stock went from $94 down to $11. Retail investors gave up on it. Here's what the data actually shows. In Q1 2026, BETR grew total loan volume by 89% year over year. Their AI platform called Tinman grew 404% in a single year, and Tinman is now 50% of all loan volume. I absolutely love BETR stock at this price. Think about what Tinman actually does. A traditional bank's mortgage process is like having someone assemble your IKEA furniture by hand. It takes 45 days, costs a lot in labor, and the result depends on who showed up that day. Tinman is a robot factory. Rate quote in 3 seconds. Pre-approval in 3 minutes. Full closing in 3 weeks. The AI doesn't call in sick, and it gets faster every single month. Let the numbers do the talking. 1.645 billion in funded loan volume, 89% year-over-year growth. Revenue up 52%. Adjusted EBITDA improved 48%. That's the 5th consecutive quarter of improvement. This isn't a one-quarter fluke. This is a trend. 3 major firms started covering BETR in the last 45 days, BTIG, Roth Capital, and Needham. The median analyst target is 46.50. The stock is at 27.30 right now. That's 70% implied upside from analysts who just started paying attention. My position is 1,500 shares at an average cost of $27.82. I'm slightly underwater right now, and that doesn't change anything about my thesis. Here's why I'm not selling covered calls. Options premiums on BETR are sitting at a 0% 4 percentile, the cheapest they've been all year relative to BETR's own history. Selling calls into the worst premium environment in the stock's history doesn't make sense. I wouldn't sell any calls lower than $35. And right now, the premium at that $35 strike doesn't justify the trade. So I'm holding all 1,500 shares, waiting for the right setup. That's what conviction looks like. Now let's talk about the one that might surprise you. Snapchat is at 480, down 54% from the 52-week high. The narrative right now is brutal. Spectacles looked weird on people. Meta is eating their lunch. TikTok already won. I think the market is completely getting this wrong. Here's the setup. Snap is getting punished for 2 problems at the same time. Problem 1, the AR spectacles launch. The glasses aren't winning style awards yet. Problem 2, the company isn't profitable. Net margin is negative 6.7%. Here's the thing. Those are 2 completely separate problems, and the market is pricing in both of them failing. Forever. Think about it like this. You own a restaurant with 2 problems. The interior needs renovating, and your head chef is having an off season. The market is pricing this like both problems will never be solved. But you only need one to get fixed for the business to change. Snap's profitability, the head chef problem, might get solved without the hardware even mattering yet. Revenue is growing 12% year over year. They've been cutting costs aggressively. And 3 major banks, JP Morgan, Goldman Sachs, and RBC Capital, all updated their targets in May 2026, all around $7. That's 47% upside from here. From analysts who aren't even bullish. They're neutral. That's what a floor looks like. I think this is an opportunity of a lifetime. At 480, Snap is baked in to fail. Both problems, forever. But what if just one of them goes differently? What if Snap hits profitability by end of 2026? The stock doesn't stay at 480. If Snap becomes profitable, which JP Morgan, Goldman, and RBC all think is possible, I think this stock belongs at $10 or more. That's more than a double from here. I don't own Snap yet, but this is one of the highest conviction setups I'm watching right now. If you're finding this breakdown useful, hit subscribe. I cover setups like this every single week. Now let's close with the cleanest math of the 3. UiPath, ticker path. This one doesn't require a turnaround story or a hardware bet. It's just valuation math. In Q1 fiscal year 2027, UiPath posted its first ever GAAP profit, $22.5 million in net income versus a $22.5 million loss the year before. A complete reversal. The company has $1.42 billion in cash, essentially zero long-term debt, free cash flow of $130 million. The stock is at $10. Here's where I'm going to be straight with you, because that's what this channel is about. Part of that GAAP profit came from cutting stock-based compensation by $23 million. Some of the profit improvement is from paying employees less in stock, not purely from the business growing faster. You need to know that. But here's why I still love the setup. Customers spend more on UiPath over time. Net retention of 109%. Over 950 companies are building AI agents on their platform right now. Founder Daniel Dines came back as CEO, and the stock is at $10 with a median analyst target of 13 to 14. Think of Path like a house in a great neighborhood that had a bad year. The comps say it's worth more. It's listed at a discount. The roof is fixed. The right owner is back. You're not buying hype. You're buying a gap between price and what the data says it's worth. I don't own Path yet. My target is $12 or better. That's 20% from here with fundamentals that back it up. Here's the common thread on all three. And here's the answer I promised you at the start. BETR's priced like a struggling lender. The data shows an AI machine growing loan volume 89%. Snap is priced like it will never be profitable, and spectacles will always look weird. The math says only one of those needs to change. Path is priced like AI will destroy it. $1.4 billion in cash, and its first GAAP profit says otherwise. The market is wrong on all three, and the clearest sign of conviction isn't what you buy. It's what you're willing to wait for. Here's exactly what I'm doing with my money. BETR 1,500 shares, holding, not selling calls until the premium is worth it. Snap, on my watch list, very high conviction, waiting for the right entry. Path, watching for the setup, target $12 or better. As always, this is what I'm doing with my own money. Do your own research before making any investment decision. Like and subscribe if you found this video helpful. See you in the next one.